what this is.
I'll wait till a few people get in here and do this brief intro, because I definitely gotta watch this Suns game. What up, Max Ryder? Sharonda Lopez. Feels weird doing this on a Friday night, man. This needs to be like a Monday, Tuesday, 3 o'clock, 2 o'clock thing. But I woke up late, went to bed late, woke up really late, so I said I was gonna do this, but this gonna be a quick, oh man, a little quick intro, get everybody kind of started, because I gotta get to this Suns game. But listening to DJ Jazzy Jeff live. I gotta wait let's wait a few minutes. I know a lot of people aren't interested in stocks on a Friday night. Gotta do this around 2 o'clock. But I kept saying, I told some people I was gonna do this today, so I'll do a little quick version and probably hit it Monday or Tuesday real hard. But I'll set some times up so you guys know. Let me go into, where is my stock shit? Oh man. What up, Zona girl? I had to look at this on my phone. Yeah, the vid will be up so you can watch it later for sure. This is gonna be a quick introduction, kind of late on a Friday. I'm gonna start doing this probably on Tuesdays or something like at 3 o'clock. I'll pick a day and a time, but I just told some people I didn't want to look out. I didn't want to look like a liar. So I told some people I'll do something today because we were talking about it this morning. So what I'm going to, I gotta turn this down. Jazzy Jeff be jamming. I don't know if y'all listen to his live on, he does the Magnificent Friday where Jazzy Jeff makes this, it's pretty dope. Let me turn this down though. So anyway, let me do this real fast so everybody can get back to their Friday night. If you want to start investing, what I'm going to say is, if you're new, this is if you're brand new, you don't do any type of saving or ever, I guess everybody kind of saves, but if you don't do any type of investing at all, number one, get a Robinhood account. And the reason I say Robinhood, because they allow you to buy fractional shares. So if Tesla is $800 a share and you only have $100 to invest at the time and you want to buy Tesla, you can't buy Tesla. But you can buy it on Robinhood because you can buy fractional shares, which means if you have $100, you can put $100 in a Tesla. You won't get a whole share, but you'll get 1/4 of a share. And what's the other one? Fidelity also allows you to buy fractional shares. I think there might be a couple of other brokerages that does, but those are the only two I know that allows you to buy fractional shares. Now, why I say Robinhood, because Robinhood, when you do a recurring investment, I don't want to get too ahead of myself. I want to stay in the beginning. I want to keep this as simple as possible. So when you set up a Robinhood account and any account really, they ask you to transfer money over into that account. You link your checking account or savings account from Bank of America over into the brokerage account. So let's say you transfer $100 over. With Robinhood, so let me get this. I got to explain this like everybody just doesn't know anything. So with Robinhood, your first time you have to go in. Now you got $100 in Robinhood. Now you have to pick which stock you want to buy. So if you want to buy Tesla, you go in there and you say, hey, I want $100 of Tesla. But with Robinhood, you only have to do that once. So if you're in the other brokerage account, let's say you buy $100 of Tesla and you want to, the following week, you want to buy another $100 of Tesla. Following week, you want to buy another 100. With Robinhood, it'll automatically do that for you if you set it up that way. All the other brokerages, you have to go in there and manually do it. That's why I like Robinhood. So for instance, when you guys get set up, and let's just say you can invest $10 per week. So the first time you go in there, you manually and you set up everything. I want to invest $10 in the Tesla. And you can do a recurring investment each week of $10 or whatever, $100. And with Robinhood, it allows you to invest directly into the stock. It'll automatically do that for you, where you don't have to go in there each week and do it yourself. The other brokerages, you have to go in there and do it manually yourself each week. And for people that don't have time, they work, they just don't have time to monitor it. That's why I like Robinhood. I got Vivian set up on Robinhood. I got my friends set up on Robinhood because they all work 9 to 5s. And they don't really have time to go in there and place a buy themselves. So this makes it real easy. You just go in there once, set everything up, and it does it for you. That's what I like about Robinhood, especially for the beginners. Me, I'm here all day. I can, punch in stuff myself. Let me see some of these comments. Everybody's saying hi, Urban AZ. Sounds convenient. Yeah, definitely convenient. What I'm gonna do is I'm trying to hopefully I'll have this StreamYard. I'll know how to work it by Monday or Tuesday, and I can show you guys step by step via StreamYard how to set your account up, and what stocks to buy. So here's the thing with me. The stock market, if you invested into, this is going to be hard to explain to newbies. I don't want to get so far ahead. Here's what we need to do. Over the weekend, if you want to get invested, whether it's $10, $5, whatever, I say everybody should start with something. Set up a Robinhood account. They're going to ask you for your ID, social, all that stuff. If you don't know how, DM me and I'll help you get it set up. But if you can, set up a Robinhood account over the weekend. You don't have to put any money in or whatever. They may ask you to put maybe $10 or something. I don't know. Do that. And then come Tuesday, I'm going to definitely say Tuesday, hopefully I'll have the StreamYard set up and I can walk everyone at once through the steps, whether you're investing $10 a week or $20 a week or whatever. I'll walk you through that. The one good thing I like about Robinhood also, you don't want to have to look at your stocks every week. Because it goes up and down. You just want to do your recurring investment, whether it's $10, $20 or whatever, and you just want to let it go. Don't mess with it. You don't need to look at it. Maybe check it out every month to see what your portfolio's doing. I call it save vesting. You're saving and you're investing at the same time. So let's say some people want to save, let's say you make $4,000 a month and you want to save 10% of that each month. So you want to save $400 a month for emergencies, whatever. So instead of just putting that in under your bed or in a bank account, because a bank account, all they do is take your money and invest it anyway. So why not invest it yourself? They make money off your money, banks. So why not make money off your money? So you take the $400, you save it each month. But what I advise is you split it up into weekly deposits. So instead of waiting till the end of the month and putting $400 away, you put $100 away each week. And I do it this way because say at the end of the month, you got to put this $400 up. But let's just say something happens, an emergency, whatever. You need to get new tires or something like that. You're not going to save that $400. You're going to take that $400 and you're going to get some new tires or whatever you need to fix. But when you break it up weekly, you don't really see it missing. You want to put money away that you won't ever have to use. So if that's $5 a week, then you do $5 a week. I don't advise anybody to do something that they might have to go back and get later. If you can't miss $100, don't do $100. Do something weekly that you can miss, and then later on you can add more. But I always advise people, if it's $10, that could just be you eating out fast food once. You skip eating out the fast food or whatever. But do something each week. If that's $10, you do $10. That's going to add up at the end of the year, especially with whatever you invested in, what I have you invest, the stocks or whatever I have you invested in. it's going to grow over time. And I'm going to show you some charts. I'm going to show you charts on like Tuesday. You can see, like, I'm looking at a chart right now where it's $100 each month is being invested. And the stocks that I picked over the past 4 years, my portfolio has done 33% performance. Like, so if I got $1,000, I've made $330 off that $1,000 each year, 30%. So imagine if I got $1 million, I'm making $333,000 each year off of the stocks and the stocks that I pick. So hold on, is there any comments? I'm already for a long sleep, blah, blah, blah. That's Lindsay. That would be hard. Oh, that's Lindsay again. Yeah, to check all the time. All right, so that's Lindsay. Derek, did they send you a MasterCard? They sent me one. Did who? Robinhood? No. Most of my money is in Merrill Edge. Anyway, so now I lost where I'm at. Fuck. Should have just kept talking. I lost track. Jesus. So anyway, let me just start here. Only do what you won't miss in the beginning. So if that's $5, do $5. Like I call it safe vesting. You're saving and investing at the same time. But you don't want to do, like I had a girl, she was putting away maybe $50 a week. At the end of the month, she took that back out because she had to do something, blah, blah, blah. She had to pay a bill, yada, yada, yada. Don't do that. You don't want to touch this. This is what I was at. So what was this? $100 a month. Actually, it's a little bit less than $100 a month. It's like $75 a month. I got a chart. And like I said, I averaged up until this year. This year is a bad year. This year is a down year. But up until the beginning of this year, I averaged a return of 33%. So if you do $75 a month and it totals up to be $1,000 a year, right? At a 23% growth rate, that $1,000 per year after 30 years, I'm a long-term investor. I'm gonna go 10 years first. After 10 years, you will have $25,000 investing $75 a month, 80, whatever it averages out to, $80 a month. After 10 years, you'll have $25,000. And your total contribution would only be $7,000 out of that. The money you put up, save, will be $7,000 after 10 years. But off of 23% each year, that totals to be $25,000. That's what I'm saying. You have to invest long term. $7,000 turns into $25,000. That's after 10 years. You keep going, same $1,000 each year. 20 years, it's $224,000. And these are numbers I'm going to show you guys once I get the thing set up. These are actual real numbers at a 23% return each year. Now, after 30 years, it's $1,794,000. And you know what your total investment is? $19,000. That's 30 years. Yeah, that's a long time. You say, but that's why I got my son started right now. My son, I started him at 20 years old. By the time he's 50, he's going to have like $50 million. And that's real numbers. So yeah, he started out with a little bit more. I started him out with like $5,000. And you know, he's putting away more each month. But he's going to have like over $50 million by the time he's 50 at this rate. Now, it might not be 23%. It might be 15%. But still, he'll have 40 million, you know what I mean? But I'm going to show you guys different numbers. The average, if you just invested in an index fund, the average is 10%. And that's just for people that just don't want to do no work. They just put in the index fund. Me, I'm doing work because I don't have anything else to do. So I'm averaging 33% right now. Now this year, I'm down. I mean, I'm kind of break even at zero because this year is just a bad year in the stock market. But it was bound to happen. You're not going to have shit. We've been having like 7 good years back to back to back. So it's time for a market correction right now. But I think the second half of the year, the stocks will go back up. But right now is a good time to buy, actually, because stocks are very at a low price. So, but I wish I could show you guys this chart. Even at that same thing at 12%, it's a big difference. But at 12%, the $1,000 yearly, after 30 years, it's $174,000. Now, that's a big difference from 23%. 12% is 174,000. 23% every year is 1,794,000. But that's where I come in. I do the work for you. If you guys, I'm probably gonna make it a members only thing, but I tell you what stocks to put it in because I'm here all day doing the stock market. You guys won't have to do any work. If you just follow me, weekly, we do this session. And I see a stock that's, we might want to get rid of that stock. Let's change it in this. I'm going to walk you guys through that. And everybody else, they're doing the exact 33% I've been doing because they're doing exactly what I'm doing. So I'm going to walk you guys through that. You won't have to do any work. We may just change your portfolio once every 3 months. You know what I mean? If I just see something that's like, or if I see something better, I'll tell you guys, hey, let's jump over into this. It's kind of a group thing. I'm not going to put you in anything that I'm not in. You know what I'm saying? And I don't think I'm going to always average 33% because this year I might average like 5% or 10 because it's a bad year. But as of now, year to date, it's been 33%, which is fucking great. And that's not just me, that's the stock market doing good too. I'm only gonna do as well as the stock market. There's other things you can do when the stock market's bad. You can short the market, you could do that, but I don't want to even get into that right now. You guys wouldn't even understand it. We want to start with the basics. So what we'll do come Tuesday, hopefully I'll have that StreamYard because people could join in on that. And I think I can show my computer screen and all that stuff. So if there's any questions right now, first thing I said, I advise you to get a Robinhood account. And that way, come Tuesday, we can jump right into it. And I'll put out tutorial videos and all that stuff. Like what does a stop limit mean? What does this mean? We'll do all that stuff like every Tuesday. You guys will learn for yourself what the stock market is about, just the ins and outs so you understand it. And then you'll be able to make decisions for yourself once you learn about it, because that's how I did. I learned myself and now I kind of get it. And that's how the rich stay rich and generational wealth is through the stock market. Unless you're selling drugs, there's no other way to make money like this. It's all stock market. People get rich with the stock market, and you'll see why they do once I tell you why the stock market was even developed, why it even happened. You'll be like, oh, it was for these older white people. They created the stock market a long time ago to make money, period. It's like any business. You create a business to make money. The stock market was created to make money off other people's money. So if you ever watch some of the financial channels and you're like, I don't understand shit they're saying, that was me. They don't want you to understand. They wanted to keep it in their own club. They talk in this coded ass language. They don't want us to understand it. They don't want everybody to be rich. But I decoded that shit. It's real simple. You know what I mean? Once you figure out what that means and that means, you're like, oh shit. This shit is real simple. Everybody can fucking trade. Everybody can do all that because you can. You just got to decode that shit, to be honest. But everybody just scared. They think they're going to lose money if they invest in the stock market. You can lose money if you're doing it all backwards. But remember, the stock market in a whole over the past 80 years averages 10% returns. That's even with bad years mixed in there. It averages 10% return out of 80 years or whatever it was. I'll get that exact numbers. I'll have them Tuesday. But basically it's saying you just put your money in the stock market in the Dow Jones Industrial Average and you're going to make 10% off your money regardless if you just leave it in there. So, I mean, like I said, unless you're selling drugs or you own a company or in real estate or something like that, there's nowhere else you can make that money. And that's just being lazy and putting it in an index fund. Me, I put it into different stocks, Tesla, you know, when Tesla was $200 and all that stuff. But you guys won't even have to do any research. All you got to do is, I'm going to put you in what I'm in, and, you know, and then you just go from there. But once you learn, you'll probably start picking your own stocks. All right, let me get some questions before I get out of here. Derek, is only long-term I'm looking for, short-term good return? The problem with short-term, and I don't know what your short-term is, Bernadette, you got to tell me, is it 3 months, 2 weeks? What's your short-term? Because if you're looking for short-term, quick money, you want to do option trading. But option trading, you could also lose money real fast too. So you got to tell me what your short term is, Bernadette. Xavier says some companies only follow S&P 500 and still, yeah, the S&P 500 averages 11% like per year, I think, somewhere around that. And you don't have to do any work. You just put in the S&P, or you put in the Dow Jones, or you put in the NASDAQ, and you just leave it at that. So definitely. Buy the dip says running altitude. Ron B says, thank you, Derek. Yeah, Bernadette, you have to let me know what your short term is. And running with altitude, I bet a bunch of people in here doesn't know what buy the dip means. So we're going to have to explain that on Tuesday. And if anybody in here is an investor, if I have my StreamYard up and going, you can definitely contribute to the conversation, because I don't know everything. I just know what I do. And I know what I do is working for me, is working for my son, and is working for my family. So I'm not an expert at this. Bernadette, you say maybe 3 to 6 months. See, that's tough because a stock is kind of hit or miss when you say 3 to 6 months, unless you do options, because like right now, the stock market is bad. Now, I would tell people to buy right now, but let's say the stock market keeps going down 3 months straight. You just put money in, and now your money just depreciated because the stock market went down 3 months straight. So I can't really advise you what to put something in unless you're trading options, which if you have never traded, I wouldn't even advise that at all. Unless you're trading options, unless you know how to short the market, that stuff, I would not advise that. I would probably put it in something safe like McDonald's or something like that. But still, again, you're trying to get the biggest return off your investment. McDonald's is a slow, long-term growing stock. So that's a tough one. But I want to talk about that we'll talk about that on Tuesday, Bernadette. What else? Jose says, can you run the numbers one more time? So I'm going to run the 23%, Jose. Let me, what's $1,000? If you do it $1,000 a year, I'm going to divide that by months. Hold on. 1,000 divided by 12 equals. Then I'm going to divide that by weeks, because we're going to do weekly investments. So if you invested $20 a week, $20 per week, if you invested $20 per week at a 23% return, now understand I said I was doing 33%, but I'm going to say 23% return because after this year, my average is going to come down. I think I can do I can average 23%. So 23% off investing $20 a week. After 5 years, that's $7,000. After 10 years, that's $25,000. After 15 years, that's $77,000. After 20 years, that's $224,000. That's investing $20 a week. After 25 years, it's $635,000. After 30 years, it's $1,794,000. That's off that $20 investment per week. That would be my goal if I was anybody to invest $20 per week. If you can only do 10, do 10. If you only do 5, do 5. Just know those numbers are going to be cut. You know what I mean? So before I get out of here, let me answer a few questions. Selling your stocks in under 2 years will get you capital gain taxes, which is very, very high. But I would suggest if you're long term, you get an IRA account or a Roth IRA where you don't have to worry about the taxes. Roth, you don't have to worry about the taxes when you pull it out. Regular IRA, you're going to get taxed on whatever your tax bracket is at the time, your retirement age. But I don't want to get too far ahead again. What I have one of my guys set up, he started in July. He does $20 a week. He started in July. He's at like $2,000 now. What I'm advising him, and he has a Robinhood account. Once we get to $2,500, we're going to take that money and we're going to stick it in the Roth IRA. That way, that money doesn't get taxed when he retires. And every time he hits $2,500, we're going to put it in the Roth IRA. We're going to take the money out of Robinhood and put it in the Roth IRA. But again, I don't want to get too ahead. We're going to do this on Tuesday, hopefully around 3 o'clock. Right after the market closes, a few hours after the market closes. We'll start from the beginning, and each week we'll talk about more and more and more. And like I said, hopefully it sounds like, some people in here, they invest and they can add to it. Cause like I said, I don't know everything. And I know Card Shop, he wants to kind of get involved because he invests in with this Ustream, I could bring in some of my people in my group that are investors. I have this text group that we talk about stuff. I could bring them in to, talk about stuff too. So anyway, hopefully that kind of gets you guys a little bit wanting to invest. I'll eventually show you guys my portfolio, which I started. I have my NFL money. I started with 300. When I started investing in 2018, I took over my own stuff. I started with $320,000. At the beginning of the year, that $320,000 was a little bit over $1 million, a tiny bit over $1 million. With what the market is doing right now, it went back under $1 million because the market's been dropping. But you have to, it's like maybe 1.1 million. It's like at 900,000 now. Now you could say, oh, Derek lost 200 grand. I didn't really lose it. It's not a loss until you sell. It's just the value had went down, but it'll go back up. You know what I mean? So I'm not worried about that, especially when I started at $320,000. You feel me? I can't be mad at that dip. You gotta go with the dips. There's gonna be some dips. it's like this. It's going to be like this. Oop, dip, then come back up, oop, dip, come back up, dip. But at the end of the day, I'm going to be way up there. When I'm done, when I decide to retire and cash out, I'm still going to be up there. There's going to be some dips along the way, is my point. So you got to be able to stomach the dips. Because there's going to be bad months, bad years. But overall, the stock market, is going to go up. I'm still ahead, like you said. When I first started hitting those dips, it was kind of sickening. One day I remember it was like, damn, I just dropped 40 grand in one day. I didn't really drop it, but it made me feel sick just looking at the numbers. But unless you sell and get at everything, then it's a loss. As long as you stay in that same stock, price goes back up, you're back to where, you're back to where you were when I was at 1.1. Guarantee you by the end of the year, stock market will go back up. I'll probably, be higher than I was at the beginning of the year. So it's rarely where the stock market will just keep going down, 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 down. And I'll show you numbers that proves that. So anyway, I don't want to, Max Ryder still ahead. Where else, not even in the real estate market, you're going to get 23% or 33%. You know what I mean? So a lot of people be like, why don't you invest in real estate? And my point is, okay, if I invest in real estate, let's say I buy a house for $500,000 and they say, well, you can sell it how many years later for $700,000, right? I feel like I can do better in the stock market than in the housing market. That's just me. I can make more. And then you have to, when you invest in a house, which I'm not saying people shouldn't, that's just me. When you invest in it, you got to put the money in it. So that money's gone. Only the way to recoup that money is selling that house or renting it out. So let's say you rent it out, you still got to recoup your initial investment. With the stocks, your money's right there and you see it. Like you could take it out at any point in time. You don't have to go sell something. You don't have to wait and put it on the market and all that stuff. But I do have some realtors and people that do invest in real estate, and they could kind of explain to you why they invest in real estate over stocks. And some of them, they make good points, and it made sense to me. The points they made, I said, oh, okay, I get that. It's just what your tolerance is, I guess. You know what I mean? So anyway, I'm going to end it right there. And hopefully, Zona Girl says, how many companies did you start investing in one day? I did the usuals, probably about 6. I did Apple, Microsoft, Google, Tesla, Amazon, and I think Facebook. I did, your popular companies, and at the time in 2018, those stocks did good. That's why I was averaging 33%. So yeah, the housing market has already peaked, I think. But I'm not I think Bernadette's in here. She's a realtor. She could tell you. Interest rates was at an all-time low. So, oh man. But we'll continue this on Tuesday, most likely around 3:00. I'll put a post in the YouTube community section, and we'll go from there. Hopefully, we also have our membership stuff going by next week too, because there's going to be some good member perks. But anyway, Dallas is beating the Suns. Oh man, I got to get to this game. It's about to be halftime. At least I can catch the second half. Oh man, stayed up too late last night. So anyway, appreciate you guys. Well, I'll see you guys maybe tonight. I don't know, see what Nurse Viv wants to do. And hopefully by Tuesday, oh, my stomach's hurting right now. Ate some freaking hot dogs. I was craving hot dogs. Shouldn't have ate them. Got my stomach twisted. So hopefully I'll see you guys probably tonight, but everybody that wants to do the stock stuff, Tuesday, I'll put some stuff in the thing. Shout out to my mods, Candy E, who's in here. Lindsay's in here. Shout out to everybody that's in here. Hopefully you hit that like, thumbs up, make a comment on this video when it uploads. And we'll get to it on Tuesday for the stock stuff, all right? I didn't even think this many people be in here, honestly. But so I think Nurse Viv will be on later on tonight. I don't know if I might go to the vault. Depends on the mood I'm in. But anyway, I will see you guys later. And I'm out. 5, 4, 3, 2, 1. Talk to y'all.